Welcome to another episode of The Modern Hotelier. We're excited to release this conversation with Tiffany Donato, Chief Investment Officer at Marcus Hotels and Resorts. David, what were some of your favorite takeaways from this conversation?
Well, I think all of us got a great education. She really knows her stuff. It was great learning about Marcus Hotels. It was also, great learning that they're probably the only hotel company with movie theaters. So it made me hungry for some popcorn. But I thought she was great, and it was great learning about Marcus. How about you?
Yeah, I agree. I mean, I've been a fan of Marcus Theaters probably longer than I've been a fan of Marcus Hotels growing up in Wisconsin. That's where we always went to the movie theaters. But I've been a fan of Marcus Hotels for a while. The Pfister, one of my favorite hotels in Milwaukee. So it was kind of fun that I've got to stay at a few of their properties and now hear more on the real estate and business side of it. Obviously very well educated, very smart and good at what she does. So packed with so much information on this episode and excited to hear what everybody thinks. Let us know what you think in the comments and enjoy.
Enjoy. Welcome to The Modern Hotelier, the most engaged podcast in hospitality. Don't forget to follow, like, and subscribe, and let us know in the comments what you think about this episode. Steve, who do we have on the program today?
Yeah, David. Today we have on Tiffany Donato, the Chief Investment Officer at Marcus Hotels and Resorts. Thanks for joining us, Tiffany. How are you doing today?
I'm doing very well. Thanks for having me.
Good.
Great. All right. So, Tiffany, we're going to go through a lightning round of some short questions. We're going to get to know you a little bit better, your background, your career, and then we're going to dive into some industry topics. Sound good?
Sounds great.
All right. So, what's something that you wish you were better at?
Catching a baseball.
Ooh.
I have
What's
two
your
boys.
most used?
Yeah.
Sorry about that. What's your most used emoji?
Unfortunately, the thumbs up, which I know is lame, but I use it all the time.
That's a good. Me too. What's a luxury you can't live without?
I'm a firm believer that time is the ultimate luxury good. And I know that's not the answer you were looking for, but really trying to focus on being smart with my time and enjoying my time and kind of spending it where I want to.
Like it. So if you had a time machine and you could go into the future or to the past, which way are you going and what year?
It's a good one. What year did Amazon stock go on sale? And I can go back and just go all in instead of the 401k.
Yeah, that's a good point. What's the best piece of advice you've received?
A little cliche, but just kind of be where you are. And I think it relates a lot to, particularly in our industry, everyone moves a lot. And if you treat that move as temporary and the apartment is temporary and all of your decisions as temporary, it's going to be self-fulfilling. But if you treat where you are as this is where I'm going to be, I think it really changes the mindset of just like your home life, your work life, everything. Treat where you are as that's the place to focus upon.
All right. And what is your favorite city and why?
It's tough as a Texas girl. I'm going to say Chicago because it's where I met my husband and had my kids. So it's always going to have a big piece of my heart there, but just Texas in general is a real close tie.
Got it.
That makes sense. Well, that was great, Tiffany. Now we're going to dive a little bit more into your background. So like you said, you grew up around the Dallas, Texas area. How did that shape you into who you are today?
I think it's a mix of kind of boldness and trying things, along with even just my parents were very, I come from a long line of start with nothing, get to having a little, start with having a little, get to having a little bit more to just enough, and kind of a work ethic. And if you don't ask, you don't get type mentality. And I do think Texas has a reputation for that as well. But I think more so just growing up in a family that instills confidence to try things, I think makes you kind of get out over your skis a little bit, just enough to kind of see what you can really do, but also be able to have some resilience that when you're trying things all the time, you're going to fail a lot, and to not let that keep you from trying again. And again, just being in the middle of the country, we traveled a lot. We had sunny weather. We had all of those things going. And I think bringing a little bit of that, optimism and resilience to just both work and home life to everything is a little bit of what Texas kind of instills. I think maybe it's why a lot of people hate Texans, because we are a little loud and ask for things we probably shouldn't say. But I think it does, particularly in an industry where you're always I mean, in real estate, the number of deals you underwrite versus the number of deals that actually happen. If you get knocked down by something not working, I don't think you can stay in the industry.
Great.
That's good.
Well said.
So you went to Cornell, you got your degree in real estate finance, and then your master's in finance and strategic management. How did you end up picking Cornell and those degrees?
You know, it was interesting. It feels like I do exactly what I went to undergrad for. But when I was making selections, I was focused on the Ivies. I had, good grades in high school, all of those things. Was focused on really capitalizing, and my family encouraged for college at least go elsewhere. I think they wanted us to come back, but they did say, go out and see the world a little bit. When I picked the hotel school, frankly, I was focused on it as a business school. When I was comparing the curriculum to other programs, in the hotel school, although the case studies are hotels, it's accounting, it's business management, it's business communications, it's marketing, it's finance, it's all of those things that in my mind was more of an undergrad business school than a lot of the other programs, even within the Ivies. And a lot of my summer jobs while in school were, I worked for Merrill Lynch. I did some of these other roles because I thought that was really the direction I was going to go. And then, during that 4-year period, through a combination of getting more exposure to what opportunities there are on the more business and corporate side within the hotel industry, as well as working at a couple investment banks and not necessarily loving what I saw, people who had been doing that for 30 years, what their daily life really looked like. I think that combination left me very open to the job opportunity that I got when I graduated from undergrad with Hyatt on the development side. And it was, lowly internship analyst making significantly less money than I would if I had taken the other role with Goldman Sachs in New York. But I think I liked the career path that led to better. And obviously it's worked out kind of very well for me. But at the time, a lot of my friends thought I was crazy. But yeah.
I can imagine. So, Tiffany, we have a little debate we need you to settle for us. Looking out your window, you have the City Hall of Milwaukee right behind you.
Yes.
You've also lived in Phoenix, Arizona, where David lives right now. I come from Wisconsin, went to college in Milwaukee. So you've lived in both places. Where is, out of those two, your favorite place to live? And any tips of where to go or what to do in that city?
Interesting. So one of you is going to like this answer better than the other. And some of the context is I did grow up in Texas with sunshine. So if I could move Marcus headquarters to Arizona between those two, I would. And frankly, in the Phoenix area, we lived in Gilbert. Absolutely loved it. Beautiful area, great for young kids. It really was a wonderful experience. We liked it so much better than we thought we would when we first moved there. But then in Milwaukee, you have this little bit of like you are in a city, and I can walk out the door to restaurants, bars, theater, all of those things. It's kind of a mini Chicago, which of course Milwaukeeans don't like to consider it. But God, I really do love both. If I have to pick between the two, sorry to say Arizona, but it might also be I've got young kids. We had a pool in the backyard. I could wear them out so much more easily year-round there than here. But, I mean, they both have amazing things. And the advice I give in both is when visiting a city, people have such an impression of just where they've visited for their meeting. So, again, Arizona, I had been to Lodging Conference, and I'll go again next week. I'd been to Phoenix once a year for 20 years already, and my impression of Phoenix was just the areas I had been for the conference and had never really explored some of the nearby suburbs or other neighborhoods and things there. So I think if anyone has the time when they travel, it's like go to a couple of the neighboring communities to really get a feel for what it's like to live there, because there's very few cities in the U.S. that people live and work downtown in the same area. And it's hard to really get a vibe and a feel for what the city's like just where you're visiting and going from the airport to your hotel.
Yeah, and just to pile on, I think Arizona for me, I'm from outside of Philadelphia, worked in New York. Arizona is one of the most misunderstood states. Like people just think it's desert and there's nothing there, and there's Great Lakes. And as you go north to Sedona and Flagstaff, there's actually skiing and things of that nature. So yeah, so I'll make sure I'll make sure I have a separate little place to store this part of the episode for Steve.
There you go. And yeah, I love Flagstaff as well. Actually, there's a lot of Ledbetters up in Flagstaff. Yeah. My grandfather, the library at NAU is named after my great uncle. I mean, there's a lot of Arizona in my bloodline too. So,
well, David, you said you have good lakes. We have the Great Lakes, but that's another conversation.
There's more fresh water up here.
Anyways, that was great. Now we're going to dive into your career a little bit, how you got to be the chief investment office at Marcus Hotels. So, right after college, you got kind of unintentionally pulled in hospitality through real estate. Can
Right.
you tell us a little bit more what pulled you into hospitality?
It actually starts way back. My first hotel job, I was 15 years old. And I'm trying to think if it was legal working or not, but my godmother was head of sales and marketing for Lowe's Hotels and working in Dallas. And the Lowe's Anatole, which I think is now a Hilton, they were shifting their sales system from paper to digital. And I, as a 15-year-old, could type faster than any sales manager in their office. So I spent the summer literally typing in group data from fax paper that was starting to fray in files into their Delphi system to kind of share the information. And so it was my first hotel job, but I think it was also the first glimpse into the business of hotels outside of the front desk, everything you see as a guest, and a little bit of kind of the business operation of it. So I had some exposure to that. And then within the business world, it's just a little bit more fun that you get to walk into and experience the end product versus in some other businesses. I get that a lot of my time is spent in Excel worksheets and moving numbers around and things there, but I also get to walk into a hotel that gets built because we made those numbers work. Or even, I remember a very cool experience. I did a lot of work on the reopening of the Hyatt Regency New Orleans post Katrina, and it was very complex to get that renovated, rebuilt, all of those things. And every time I visited the city for meetings, a hotel I would check into, at least one person when they saw us with Hyatt said, "Oh my gosh, I can't wait. I worked at the Hyatt before it closed. I'm going to work there again when it opens." And being there on opening day, along these lines of employees that are so excited on their first day in their fresh uniforms, I think it puts an element to business that a lot of businesses don't have, that kind of combines the people side with the numbers in a way that's relatively unique. And I've always enjoyed that.
That's great.
That's good. And so you worked your way up to SVP of Capital Strategy and Real Estate Transactions. Can you tell us more about your journey at Hyatt and what you take from that you keep with you today?
It's interesting. The starting as an intern slash analyst in 1998. I guess I'm revealing my age here. Hyatt was also a very different company when I started. So Hyatt Development Corporation was 5 people, led by Nick Pritzker. I was really the only analyst in the company. So I had kind of this idea of let's do these projections in a spreadsheet. Let's run some sensitivities. Let's use some of these new tricks I learned at Cornell. And then as we got that system more efficient, I then had time to also say, hey, can I sit in on this call while you're negotiating this term sheet? Can I sit in on this meeting while you're flipping through this markup of a hotel management agreement with legal? And I just tried to, again, my statement about kind of trying to use your time. When I had downtime, I wanted to use that to say, how can I better understand the next level? And I don't know if you can replicate my career path as well today when you have such segmented departments, which obviously you have to do within a large public company. But I was able to be an analyst slash junior developer, writing term sheets, marking up HMAs, doing all of these things at a very early level when you had one small department doing all of it. And then as the company started to grow, I then, once I was able to hire some analysts of my own and then work more on the management side and frankly, the real estate side, because Hyatt then needed to reorganize to go public. And we needed to pull real estate holdings from entities all over the world into one holding company. So I really started to dig in on the real estate side of things there and a little bit of asset management and structuring. And then again, it's like you hire some analysts and you can do some other work. And then you hire some junior development people and then you can start to do other work. So I started to get more and more involved on the real estate side just because it was a little bit more complex. And frankly, just my knowledge base from being at Hyatt for a certain period of time, it's easier to hire people to do some of the other things. And then 9/11 happens, the global financial crisis in particular. I was able to, I think, be flexible and shift over to let's start digging into these SNDAs. And half of our hotels, even the ones we just manage, are now being managed by a special servicer who doesn't know the business, or a bank thinks they can terminate and they really can't. So I would say kind of trial by fire, the global financial crisis got me involved even deeper on both the real estate side, but also call it within the legal documentation outside of the hotel management agreement and beyond a purchase and sale agreement. Along that same time, I went to business school in Chicago. I was very lucky that University of Chicago, now known as Booth, had a weekend program. So I was able to get my MBA on weekends while still working full time and doing all the travel that entailed. But yeah, more and more I was pulled into the real estate side. But I also would say to anyone in hotel real estate to try to do this piece without a strong knowledge of a hotel P&L, without a strong knowledge of hotel management agreements, without a strong knowledge of all those ancillary agreements, you're putting yourself at a disadvantage, both in your underwriting and your deal structuring, if you're only looking at the real estate piece and not what builds that NOI that you're so focused on.
Well said. Well said. So from there, you were the SVP of investments at Atrium Holding, then the principal at TLD Investment Advisors, and then for the past 2 years, you've been the chief investment officer at Marcus Hotels and Resorts. What made you decide to come to Marcus Hotels?
Marcus, I've always been, particularly being based in Chicago, I've always been very aware of Marcus, even though they're a relatively small group. And I've had great relationships with a lot of their team members and everyone. And again, it's a company that's been around for 90 years. I think this year is our 90th anniversary. And even the hotel segment has more than 50 years. So there's a longevity and a trust and a reputation that I've always really admired with Marcus. But historically, I just thought, hey, they're small. They're probably going to stay small. It didn't really pop up on my radar from a growth perspective, where I feel like most of my skill set goes to acquisitions, dispositions, let's structure deals, let's find partners, let's do all of that. And then they reached out while I was, frankly, pretty busy consulting. TLD Investment Advisors was just my own group. And again, thanks to everyone in the industry, I was always so lucky that when I was consulting, my phone was ringing instead of the other way around. So I consider myself very fortunate in that for those brief periods of time. But when Marcus reached out, and the chief investment officer role is a new one that they had not had historically. And it was with a little bit of an idea that they do want to shift how we use our balance sheet with a little bit more focus on growth on the hotel side and with using that balance sheet on the investment side. We're not looking to compete, with Ambridge Davidson, these other big third-party managers. We've got 16 hotels, 7 of which we own, 9 of which is kind of partnerships or third party, but we're very hyper-focused on our kind of small and mid-sized portfolio. So we want to grow, but without losing what we think makes everything special. And frankly, we want to grow as real estate partners, not just third-party management agreements that we think are, we think we are great managers and we add a lot of value there. But overall, with our strategy, having a lot of 3 to 5 year agreements and moving our people around with all of that is not where we think we get the best results, whereas aligning ourselves with the real estate really is. And so the creation of this new role was to kind of pull in from me some experience that Marcus hadn't really been doing. They'd been growing. Most of the hotels are owned 100% on balance sheet, no debt, which was a godsend during COVID, obviously, to not have any lenders to deal with during all of that. But it's not the most effective way to actually grow, add properties, add geographic distribution if you're 100% equity off of the liquidity that you have. So my focus has been to grow, but with partners. And we've done that in a combination of ways, GP LP partnerships with us being a GP or co-GP. We've talked to some existing owners about recapitalizations. And that's an area that I think is going to get pretty interesting as PIP requirements are starting to put pressure on everyone now, but they don't necessarily want to have to sell, but they may not have the capital. Because we can come in as an equity partner, we can say, hey, if management is available, because we always want to manage anything we're invested in, we might be able to fund that PIP for you. Let's have this joint venture that we're creating off of this, but we can bring capital to the table along with the business plan and repositioning for it. So frankly, what attracted me to the Marcus role was the people at Marcus and the reputation of how they work. And it sounds weird to say the freedom to not do bad deals. There's always pressure to put money out the door anywhere you are, and there's always pressure to grow. But there's a good comfort level that we look at a lot of deals, and most of them, frankly, don't pencil with the asking price. There's this bid-ask spread that, the whole industry has been dealing with. I feel empowered to make good decisions instead of just having to kind of throw flags on the board. And it's really nice. And we've got some exciting things in the pipeline now, which makes it kind of fun to talk about. The past year or two, just overall for transactions, has been slow for everyone. But I feel really comfortable that we're making the right moves and putting the right structures together for kind of long-term hold deals and long-term value.
So you touched on it, but maybe for those who aren't familiar, like you said with Marcus, maybe a little bit more about the types of properties, locations,
Right.
things of that nature. Maybe dive a little bit into that so people understand more about Marcus.
Absolutely. We've got 16 hotels, and that runs the gamut. Most are full service and lifestyle. I would say that our limited service one is the AC Chicago, which the whole industry can debate whether that's really limited service, select service, hybrid full. But again, it runs the gamut from we've got a small hotel in LA, the Garland, to an over 1,000-acre resort, Grand Geneva, that sits kind of in between Milwaukee and Chicago. And there we've got, a ski hill, golf courses. We're looking at adding glamping, doing things there. But overall, I would say our profile is we are full service, boutique or lifestyle is the majority of what we have. And about 40% of our rooms are completely independent. Obviously, we've got great relationships with all the brands, but we also really take an independent lens. And frankly, an independent hotel we developed here in Milwaukee, the St. Kate, is a brand we might look to expand into other cities. We've been so happy with it. It's, exceeded all of the expectations. And that might be one that, although we weren't brand building when it was done, we think it is something that could become unique and something that you can expand into other markets in the U.S. as well. Right now, I would say if there's a lack of visibility or knowledge of Marcus, beyond the fact that we've got 16 hotels instead of 1,600, is we are a little bit clustered in the Midwest right now from the ownership standpoint. And I think that makes sense with our Milwaukee headquarters and Milwaukee home base. But we are actively looking to expand that geographic footprint for both geographic and, frankly, seasonality diversity. I know our CFO would love some Q1 performance from some resorts in the Sun Belt when the Midwest is covered in snow. Although, frankly, the ski hill in Grand Geneva helps us a lot there. But a lot of what we're looking at is let's look at the coast, let's look at Sun Belt, let's add some geographic diversity, because I think a lot of our growth can be a little bit hub and spoke. Once we've got a hotel in Texas, it's a lot easier to talk to other owners about here's other hotels we can manage or invest in Texas. Because I think any owner, and it's a smart question, is what else do you have in the region? What else do you have in the area? Is your knowledge base going to work for a hotel like mine? And so where we get the most opportunities and the most inbound is, frankly, kind of scatterings around some of our existing hotels. And what I think is helping, and this goes back a little bit to growing with partners instead of just our own or totally third party, two of the pretty active potential acquisitions I'm working on now, both are with partners we have on other deals that we've done somewhat recently. So you do a deal with a partner, you do a good job, you execute well, and then it's easier to move forward with them again. And frankly, then they come back to us on, hey, you're doing a great job managing and being a partner in this one hotel. Let's look at more things together. And I think that business case is proving itself out. Again, deals are hard to do, knock on wood. These are deals that actualize or kind of get done in the next 2 quarters. But we're very happy with the fact that the approach of growing with partners and letting that yield even exponential growth is starting to play out, because we'd rather do multiple deals with really trusted, strong partners than let's just do one and done with a bunch of different groups. I think we like to be seen as a company that you do a lot of deals with, as opposed to, hey, we did that one, but I would never work with them again type thing. So we're very relationship focused. Again, we're a public company, but led by a family office. It really is, it's still the Marcus is in control and making a lot of decisions, obviously consulting with, the board and everyone. It's a very, very cohesive group, but we take a very long-term strategic approach as opposed to feeling like we just have to hit quarterly numbers. And frankly, part of that's probably helped by the fact that, more than half of the company's public EBITDA is movie theaters instead of hotels. So I get to go under the radar a little bit. When we spent $40 million on the Hilton in town last year, people aren't overly focused on how much we've been putting capital into our own portfolio during this downturn, because most of the talk on the earnings calls is Tom Cruise and movies and what's going on with digital streaming. And I can get creative and go long term without having to worry about, our analysts going to freak out over something we did one quarter that doesn't really have earnings until the following quarter, things like that. It allows me and really the whole company to be a little bit more long-term in that thinking.
That's great. And you led perfectly into my next question.
Okay.
I think you might be one of the only hotel groups whose sister company is a movie theater. company as well. Growing up in Wisconsin, went to Marcus Theaters. You get any special perks with the movie theaters, or are you thinking about incorporating the theater side into the experience side with the hotels at all?
There's always a thought of how can you be better with these things? And again, yes, I do get free movie passes for me and my family. I'm not saying it's the only reason I took the job, but we do really use it. And actually, my kids and I will be in the background of one of the pre-movie clips
No
through
way.
like a raffle that I won for charity. So keep an eye out for that.
Will
But
do.
I think it does speak to trying to be creative with the spaces that we have. And we do this both with movie theaters and in hotels. So, for example, on the theater side, to address that, at one of the theaters nearby, they've kind of converted one of the big theaters into almost a sports bar. And we call it the Wall. And you have this huge screen. And it's like, hey, Michigan versus Northwestern are playing like big sporting events, big NBA games, everything are screened in that space. And you have servers bringing you beer and wings, and you're watching the game in a movie theater, but it's kind of set up in that way. And I think because we have, again, so much ownership of our theaters, and again, during the pandemic, I mean, talk about a perfect storm during the pandemic to own movie theaters and hotels. But they really used it to, let's buy out leases on the theaters, let's reinvest in both hotels and theaters while they're not packed, and really kind of setting ourselves up for exponential growth outside of it. But I think that entrepreneurial spirit of, hey, let's try it. Let's convert this theater into the Wall. And if it works, then we can roll it out in more places. In the same way with if we have an underutilized outlet or just meeting room or space in one of our hotels at the St. Kate, we have kind of a PDR that wasn't being used kind of as much as we thought. So we said, now we're doing omakase once a month. And it is local people coming to it, and it sells out instantly every time. So I think we try to experiment. It's a little bit of the theory of like make mistakes, but then fix them quickly. And I think that ties to whether it's theaters or hotels, how can we better utilize space that may have either outlived its use or outlived what people think of it? And how can you kind of convert it into a different experience? And again, the other example I'll give there is, glamping or outdoor experience that everyone's talking about. Because we have all this acreage in Grand Geneva next to this resort that's already kind of full year, we said, all right, let's create our own concept of what we think works here. And if that really works, then we can roll something out. We've looked a lot at kind of investing in other people's concepts. We've had a lot of opportunities to do that. And frankly, we consider ourselves entrepreneurial and saying, let's start our own thing the way we think it should be, as opposed to just kind of buying in to something someone else has done. And that applies across the gamut. I mean, we all sorts of things, call it hospitality adjacent concepts. We
Sure.
talk about all the time, whether it's something that can work in our hotels, our theaters, both. Obviously, the family has a lot of restaurants. There's a restaurant group, real estate everywhere. So I would say from the standpoint of kind of theaters and hotels together, they both are tied to creating experiences for people that are worth leaving home for. Our couches have gotten so comfortable and our homes have gotten so comfortable that is it still worth it to go on a staycation out? Why, would you go spend a weekend downtown in your own city? Why go to a movie when it's going to be on streaming in 6 months or probably less? Things like that. So there is a lot of tie-in to what might seem like unrelated businesses and trying to focus on the experience. And, the capital side, again, we've invested more than $100 million over the past couple of years, even within our small portfolio, on really improve and reinvest in what you own. But the experiences are what really tie people to it. And that's where we really try to hyper-focus on our small portfolio.
I have to say before I ask the next question, the Garland is my favorite hotel in the LA area. The
I
restaurant
love
is
it.
incredible. And when I was commuting to LA, I tried to stay there as much as I could. It was just an awesome place. Great vibe. Any plans for Marcus to expand, or what's next? What's up and coming for Marcus?
Absolutely looking to expand. Yeah, it would be pretty career limiting for me as the chief investment officer to not be looking to do that. And again, shortly after I joined, we acquired the Lowe's Minneapolis with some partners, converted that into a Hilton, and are working on getting the renovation going there. There's a couple other deals, like I said, kind of in the LOI stage pipeline on acquisitions that we're looking at now. Again, we've got good liquidity. We have a very strong balance sheet, very attractive debt ratios, all of those things there. And we do want to use it, but use it smartly, not just kind of throw money at a deal because we have the capital. So we're definitely looking to grow, add properties. Primarily, I think that growth is going to be through joint ventures and partnerships on both hotels that are on the market. And another one is frankly a recapitalization, with an existing owner. They're restructuring some debt. They need just a little bit of equity. They also want to bring in a new manager. And all of those dots on the map, at least the ones I have under LOI right now, are all outside of the Midwest. So we're not anti-Midwest. We will always continue to grow here. I think obviously we've got a reputation of excellence there. But for growth, we are looking for geographic diversity. As I said, at least my nerdy, I'm looking for some EBITDA diversity from quarter to quarter to give to my CFO to smooth that out a little bit. And yeah, you've got to do that with yields that are attractive to third-party capital. You've got to balance the goals of, everyone looks at a 5-year levered IRR as if that's the determination of if a deal is good or not. And obviously our deals all pencil with that. But admittedly, I'm more focused on what is the stabilized cash on cash? What is the stabilized debt yield? Because as we've all learned through all of these cycles, if your investment only works if you have a capital event in year 3 or year 5, you might be in trouble with what your expectations are. So we like to run 5-year scenarios, 10-year scenarios. What are these really annual yields that we're looking at as probably more of the focus than just that 5-year IRR, particularly with current debt rates. If you're over-focused on that, it's very hard to look at the overall strategy. But yeah, growth is absolutely an area we're looking for. Marcus wants to grow the hotel piece within the corporation. We're still dedicated to theaters and still growing within that. But in my mind, I would like for the hotel division to be a larger part of the EBITDA. And I think we can do that pretty strategically. Again, if you've got 16 hotels and you add 2 a year, that's very strong growth without having to get crazy, without having to go out and do deals just to add dots on the map. So I feel really good about it. And
That's good.
Again, if we have this same conversation a year from now, I'd love to be able to say all 3 of those deals I had under LOI just happened, and now you know what they are. But we'll see.
All right, good
That's
luck.
great.
Yeah.
That's great. So now we're going to dive a little bit more into the thought leadership section of the podcast. So this year has been a little tough for hotels with labor shortages, rising costs, things like that. What is Marcus Hotel's growth strategy over the next couple years to kind of overcome these challenges?
Well, I'd say first it's making sure we're underwriting the challenges. A lot of hotels you look at right now are understaffed while they're on the market, or they're kind of running skeleton crew. So I would say a little intellectual honesty in our P&Ls both helps and hurts us. We're not going to win any pro forma wars against other managers. Frankly, very often when someone's kind of looking for a manager with an acquisition, we're told that our P&L is significantly lower than some of the others. And then a year later, they tell us that ours was accurate. Because I think, again, because we are also co-investing, we're very honest. We're not trying to sell a dream to someone. And labor cost is a very real thing. And on the thought leadership side, I think we're very proactive on trying to look at AI, try to look at solutions, try to look at areas that we can be creative with how you staff. In any market where we have multiple hotels, obviously looking to complex at the kind of non-hourly level is a great way to try to add efficiencies and get creative there. But yeah, you have to underwrite a realistic cost approach, and then also underwrite how can you actually compete within this market. And I'd say historically, even in the downturns, we've been great at projecting kind of our RevPAR index. How are we going to reposition against this competitive set? And then, with COVID happening and other things, you see, impact to the bottom line, but our RevPAR index is still there. So there's only so much you can do to drive in the market, particularly in these smaller hotels. I think if you're a 1,000-room convention hotel that can bring in meetings and kind of do things on your own and compete with a convention center, you've got a little bit of an ability to counteract what's happening in the exact market. But I think where we are best is really projecting how we're going to compete within what the market is doing. And that's where it gets challenging too. You've got a lot of deal opportunities where it's a great basis. And people say, hey, it's a basis play. I'm like, you can't eat basis. And this is a city that has pretty low projections for growth. Or the opposite of, people are projecting recovery. I mean, the poor owners in San Francisco have been trying to project, they're finally getting some recovery. But there's been a lot of deals at an amazing basis that still kind of don't pencil in some of these markets that have struggled to return. So I think intellectual honesty, creativity, trying to really find ways, again, to use underutilized spaces and see if you can add some ROI to those without spending too much has been our approach. And again, just the hyper-focus and change quickly. I mean, there is a monthly performance meeting where every single one of our hotels is discussed by the president of hotels, the chief commercial commercial officer of hotels, like very senior leadership is talking about every hotel in our portfolio every month and making adjustments and making changes. And that could be as simple as, okay, next month looks a little tough. Let's reduce rate a little bit and see if we can steal some market share with some occupancy. And if that works, maybe we ramp back into it or vice versa. Obviously, you'd always rather push rate for the margin, but you have to adjust with the market on a very quick, sometimes weekly, daily basis. And I think that's where being hyper-focused as opposed to just being kind of plugged into a revenue management system is where you make the difference. And we see it in market share. Even in markets that are underperforming, we see it in market share through truly that like flip the switch. Okay, you've got a band coming in. What can we do with this other event space that kind of markets to them and gets them to spend more at the hotel while they're in town? Those types of things. And I know every hotel does that and every good GM does that. But I think we focus on that flexibility and that kind of quick change at such a high level that it helps give that direction to the field. And then for me, I always tell them the better the hotels we have run, the easier it is for me to get new deals. So I say, every dollar you save, apply a cap rate to it, and let's do it. Every dollar you bring in, apply a cap rate to it. You're increasing that value. So even when we do get together with our GMs and accounting groups and sales, I always hit home that it may seem like there's micromanagement because we're trying to cut 10,000 out of an annual budget, but multiply that by at least 10, and that's the value of the asset to the market and to the world. So we try to make sure that our GMs are thinking like an owner when they're making these decisions, as opposed to empire building because we're getting a fee on revenue. He said, actually, the returns to Marcus are a lot more tied to the real estate returns than that management fee. So we need our GMs to be acting kind of as owners' representatives for us with every decision that they make.
Well said. Well said.
Yeah, so you brought up how competitive the hotel market is. What advice would you give to hotels to stand out, and how is Marcus standing out?
So again, I think if I'm talking to owners, which I frequently am, they tell us when they come to us in particular is when there needs to be creative solutions to, I don't want to say poor programming, but inefficient programming or outdated programming. And that can speak to, here's a hotel that had 3 restaurants 20 years ago because people used to love hotel restaurants. What do we do with these spaces now? So I think we really excel with getting creative and kind of using that entrepreneurial spirit to, I know it's kind of a geeky term, but how can you increase your revenue per square foot? And how can you increase your profit per square foot of your building? Not a whole lot you can do with back hallways or things there, or can you turn what used to be that room into a golf simulator or things like that? So we're always trying to think through spaces and how you use that square footage in the best possible way. That's kind of an owner mindset to it. And as far as, again, standing out, I know it sounds a little cheesy. It's like you have to create the experience. There's certain things that every hotel has to do. The room has to be clean. The Wi-Fi has to work. The service has to be friendly. It's easy to put on a slide deck. We stand out because we provide great service, and here's our service scores and all of those things. I think those are must-haves, and those are the minimum that you have to be providing to get people to stay at your hotel, want to stay at your hotel, for us to get the referrals that we do from our brands. We're so lucky that Hilton, IHG, Marriott, everyone, they're frequently recommending us to some of their owners because they know that we execute well for their brand. And I think that's a strong indication. But what are you doing that's above and beyond that? And realistically, without adding a ton of costs. It's really easy to add amazing experiences that guests love by giving away free stuff. How are you creating something that they'll pay for, that they also enjoy, they're going to talk about and come back for or recommend and things there? And again, I do think that's something we're able to do because of the size of our portfolio. I think if we had 200 hotels, it's very hard to execute that level of creativity and flexibility. And I think right now that's also why our core is on some of these lifestyle hotels where you can be a little bit more unique, where the guest is looking for something that's a little bit more unique. And I think that's why there's a good fit for us. And obviously we do very well with, some of our more typical meeting and convention hotels because we try to add some of that level to it. But I think it's an advantage that our scale or lack thereof actually gives us for both ourselves as investors and for our ownership partners.
And well said, kind of leading into the next question. You said you got to get creative with spaces and help create these experiences. I feel like experiences have become a part of, some of Marcus's properties. How are you focusing on the experience side of hospitality at some of your properties?
A lot of it kind of starts with the basics. We really encourage everyone at the property to talk to the guests a lot about, and even asking kind of challenging questions. Instead of just saying, tell me what was so great about your stay, it's a, what do you wish we had here that we didn't have? What was missing? And so it's kind of this aspect of look for exploratory information instead of confirmatory information. I know, sorry, that's a little business school speak for everybody there, but it's if you ask questions that are going to give you answers that you're looking for, there's a certain level of feedback you're going to get. If you ask questions that make people feel like they can give a candid answer, you're kind of almost demanding, what did we do wrong, or what should we fix? What should be better next time? Whether it's just the tech survey that's being sent out, or really more importantly, just talking to guests while they're there, getting feedback from the front desk of, hey, what were people asking for? Not what were they complaining about, but what did people ask you at the front desk? Did they ask if there was a walking trail? Did they ask if you had any bikes to rent? Those types of things. So weirdly enough, I think you have to search, look for issues and find those issues to create the solutions before it's really even kind of an expectation. And again, that leads to, hey, maybe 1 week people ask for bike rentals and then you bought a bunch of bikes and then the next 2 years no one asked for a bike. But you have to be willing to, again, I mean, Greg Marcus says this a lot. He's like, make small mistakes and fix them quickly. So it is, let's encourage ourselves to make mistakes, which sounds counterintuitive. That's obviously not a business model. Let's go find mistakes. But I think that's the only way you find unique and creative solutions as well. And so it's really as simple as just talking to people and digging for what they actually want or what they wish they had. And then trying to pay attention to trends as well. I mean, frankly, the movie theater and restaurant division gets a lot of requests for, hey, they want this kind of beer, they want this drink, they want this non-alcoholic cocktail, they want these types of things. Okay, if that's trending in theaters and restaurants, people probably also want that on the hotel bar menu. So let's use all the information we have from everything we have to kind of try it out, see what works, see what doesn't. But sometimes you really have to dig for that honest feedback, which sounds counterintuitive to how much people like to complain on Yelp and like to complain about things. But to dig for what you should have or what they wish you had just takes a whole lot more work.
You might have to do some snowmobile rentals as well as bicycle rentals with the,
There you go.
with the winners
I
in
know
Wisconsin.
we have scooters
so.
at Grand Geneva now, but yeah, snowmobiles.
There,
I'll talk to legal
That's
about
it.
what waivers we'd need for those.
yeah, probably need a few. Probably need a few.
But no, it
that's a
did
great
kind of lead
segue.
to, we did a lot of igloos in the winter at Grand Geneva outside on the pool deck. Hey, the pool deck's empty space that's not making money for several months a year. Unless, let's add a really cool, fun experience. People can do s'mores, drink a little too much of cinnamon-flavored drinks, all of those things. But how do you monetize spaces, but also creating an experience? Again, my kids ask about going to the igloos all year long for years since we did that once. I try to remind them that it's not really a summertime thing, but if you think I'm going to be able to get away with not going to the igloos at Grand Geneva, even one winter that we live here, you don't know my kids.
Yeah.
So, yeah.
That's funny. So kind of continuing on that, what trends are you seeing in hospitality and which ones do you think are going to continue to grow?
It's interesting. We talk about this a lot, even getting into specificity. I guess I touched on one before. Truly the trend toward mocktails and less drinking, both on transient and group events. I think group events are trying to recognize that. And frankly, whether is that people just trying to live a healthy lifestyle. Frankly, I think there's an overlay of, there's weight loss medications now that people react badly to large meals or sugary drinks or things like that. So even just the other day, we were saying within our mocktail menu, let's make sure they're not too sugary because, if you put a Venn diagram of people who don't want to drink, those some people may also not want thousands of grams of sugar in their drink that looks fun. So let's think about that. So how do you, again, create events that aren't just a cocktail party? How do you create things people can do at a reception that's not just standing at the bar? I think that is a trend that does seem to be continuing to grow as it relates to, and again, on a hotel P&L, alcohol sales have always been very profitable. So you like having those, but how could you then convert trends into other ways people can spend their time and money? So that is one there. You start to look at length of stay and how can you add that at certain spots. Obviously, everyone's trying to deal with, it's not really seasonality, it's day of the week. As return to office is making Tuesday, Wednesday, Thursday pretty strong. How can you be more creative with things you do on Sunday night? And again, that's something we speak to, whether it's omakase here in a dark room or things there. How can you bring traffic into the hotel, not just for your OC and ADR, but you're bringing revenue in and keeping your staff working good hours, because the labor market is so competitive, both on pricing and just finding the best people, that as long as you're keeping people engaged, they're working events they like to work, they're getting the hours they need to get, even with fluctuations and seasonality and those types of things. I think focusing on that is the way you then provide those experiences. You can have a great drink menu, but if your server isn't engaging, you're not going to sell those drinks. So you have to focus on, every piece of that equation when you're looking at it. But yeah, the mocktail trend, or a little bit move away from drinking events, I would say is one that we've been talking about recently that seems to have some staying power.
Well said. So, what advice would you give to somebody who's looking to be a C-suite executive and their dream job is for a hotel group in Milwaukee, Wisconsin?
Right.
What advice do you have somebody like that?
Right. Something so specific. I get it. The view is very compelling here today. Honestly, my advice I always give is be the hardest worker and show up. And that's not saying you have to do anything crazy, but be reliable and be flexible. Most of my advancements in career that seem to be on a different or advanced trajectory from some of my other peers who got to school at the same time was me kind of raising my hand for the unknown. So I sometimes joke that my job description, when I was, SVP of capital strategy, and a lot of people would say, what does that mean? And I said, I'm never in the room to say not it when an issue comes up or something arises. And so it would land on my desk because it was complicated or different. And again, I think it ties back again to this idea of kind of growing up of like, try it, be bold, give it a shot, do those things. So I think particularly within real estate, you need to be flexible, creative, and there's a lot of hard work with it. I mean, you do have to show up, you have to be reliable, and you have to be honest. If you're trying to sell some numbers to get a deal done that aren't going to actualize, maybe you got that one deal, but you don't get the next 10. So I think kind of throughout my career, even starting as an analyst, trying to be realistic, getting yelled at by developers who want the deal to look better to win a deal, but me saying like ops isn't going to sign off on it. Those types of things, I think if you can combine, integrity, just show up and be flexible. And I think that applies, frankly, to any job. I mean, it's not even specifically real estate finance, but you got to really know all the areas of the business. If you only know that returns page, but you don't know what the occupancy and ADR dynamics are that lead to that return, you're going to find yourself kind of getting trapped in a deal that didn't work and you didn't understand the dynamics, or you didn't even recognize some news you heard about the industry or the market would impact that. So you've got to really kind of branch out from your job description early on in kind of an exploratory manner and ask your boss what else you can help with. There's, what's the term they use? Eat the frog. What does your boss not like doing that you might be able to do instead? You're going to learn a lot from it and make your boss want to keep you around. I made it through a lot of reorgs, I think, because I did all the stuff other people didn't want to work on. But yeah, it's really that. Just be willing to do the work, even if you haven't been 100% trained in it yet. Just offer to help. Offer to help.
Great advice.
Yeah.
Great advice. So, Tiffany, we've been asking you questions this whole time. This is where we turn the tables and let you ask David and I a question.
Interesting. Well, I guess it might also be a little bit of a segue from a conversation. We talked a little bit about labor and AI and things there. You guys have more of a tech background than most of us in the hospitality industry. And my 1990s Excel skills have held up pretty well. But with your knowledge of what's happening in tech and in other businesses, and with your knowledge of the hotel industry based on those of us that you talk to, what are you most surprised by that we're not utilizing?
I mean, I would just say I think the one thing that it's I see it happening more and more now with hotels, but just the hotels accepting the fact that guests want to use their phone to communicate.
Right.
Does not have to be an app. It can just be through WhatsApp. It could be through SMS. But I think a lot of hotels still miss that fact that people just want to text and be like, hey, what time does the bar close? Or, the most famous one, I need more towels or what have you. And they don't want to pick up the in-room phone. And they might not be on property and they might remember that, and the best one I've seen lately is hotels are asking me, we noticed your do not disturb sign is on. We just wanted to make sure that you didn't need anything for us. Housekeeping is gone at 5 o'clock or what have you. And just that little touch is is to me is just incredible because they notice. Now I know that they're aware. They know obviously that I did put the do not disturb sign on. So that's a small one, but I think that's a baby step that every hotel should take.
Well
We've
said.
had great results texting instead of emailing a survey. And if
Correct.
you
Yeah.
text throughout the stay, you get perfect example, do not disturb, and say, "Hey, I just want water. Just throw some water bottles in there, and then I'm good." But
Yeah.
no,
Yeah.
that's a good one. Thanks. What about you, Steve?
Yeah, so we do a series with hotels kind of similar to MTV Cribs for hotels. So,
Mhm.
like, we're planning a trip out, and I've been calling a lot of hotels, and I have been blown away at how many hotels I call and nobody answers. I
Okay.
am shocked that, like, not even the front desk I'll call and find another number and nobody answers. I feel like there's so much technology out there, especially with AI. And there's all this buzz about AI and how it's useful. I totally understand. But there's so many companies out there that AI is so realistic these days that can handle those calls. So, I'm just one person
Right.
calling and
Oh,
it's getting missed. I can't imagine how many calls are getting missed. And if you're looking to stay at a hotel and they can't even pick up your call, that for me, I'm just like, okay, well, if you can't answer my call, like I'm not going to stay there. What's the experience going to be like? So for me, recently with what I've been doing, I think hotels that don't have anything like that or, maybe aren't keeping a close eye on their phone systems or front desk phones, utilize AI if that's a problem and have that kind of handle that call volume or any support you need in that area.
that's a great one. It helps with the labor issue as well. Do you have an extra
Absolutely.
person at the front desk just handling phones, or can you let them work with customers because AI is helping at least screen some of those initial things? No, I like that one.
Absolutely. And when you go check into a hotel, a lot of the things that I notice is like when I'm checking in, a phone call's coming in, then they have to have that person on hold while they're dealing with me, and there's four people behind me, So have a technology like that so you can focus on the guest experience. But that's my 2 cents right there.
Great ones. I'll make sure both of those are bothering my chief technology officer by the end of today.
Awesome. Awesome.
All
Well,
right.
this has been great, Tiffany. Great conversation. Our producer, John, he's been listening this whole time. So we are going to loop him in here and let him
Okay.
ask the last question for you.
Great.
It's been a pleasure to listen to the conversation. I feel like this was such a comprehensive deep dive kind of on the investment and growth side of things that we don't normally get. So that was a treat. My question is kind of tied into the you talked about a lot of trends and things you could do from the experiential side, but what are the things that you have done or that you have seen that have made the biggest impact, whether it's kind of you talked a lot about the focusing on non-alcoholic beverages and stuff like that. But what are the things that you've seen that maybe aren't trends, but things that you have done in the past and you're going to continue to do that I've seen have
Right.
had like the biggest return or made the biggest impact with guests?
Right. It's interesting. I would say if you look over a longer period of time, one of the things we really focus on, and obviously every hotel is focused on the guests who are flying in and staying there. We try to really make sure we also have separate programming that's very focused on locals,
Hmm.
and that helps drive. We've got restaurants that are packed when the hotel is 20% occupied, and things like that. We really try to focus on that, and I think it helps both with business during slow periods, but also for the recommendations and for the word of mouth. So if you spend a little bit of extra marketing and a little bit of focus on, okay, who's eating lunch around here? What are their offices? Or what's a fun dinner we can do? Because we also want, that's then hundreds or thousands of people that say, hey, when you come to town, stay at the St. Kate. I want to meet you there for dinner. Here's where I want to meet you. Or here's what I want to do. And that's runs the gamut of live music. We do a lot of live music nights at all of our hotels. It's a very cheap way to give exposure to local talent. It brings locals in. It gets guests staying at the bar, drinking alcoholic or non-alcoholic drinks a little bit longer, but it creates a little bit of a feel and a vibe. And it's hard to say, hey, our best trend is vibe, but it does work on a business level. And that's why I always ruin cool conversations by talking about the ROI and the bottom line of everything. Our marketing guys are like, what would make you spend more on marketing? And I say, you have to show me the ROI on spending those dollars in marketing. Obviously, we all want to be in cool spaces, but it has to translate. So I would say spending a little bit of extra time, frankly, it's time more than money. As far as social media has made marketing and local marketing so easy to be compelling and consistent and ongoing communication and get that group of customers of like who liked your post, who posted once they were there. Follow up with those people who are utilizing your hotel that may not be staying there, but they're your best word of mouth and they're bringing business and money into it beyond just the hotel guest who's flown in for a night or two. You get longer term business and value out of some of those locals. And I think a lot of brands or managers may not focus on that as much because you're so focused on RevPAR, which is, again, a huge driver. I'm a numbers nerd. The RevPAR changes the model more than anything. But I think for the longevity of that, the focus on local business and the people who are where you are really pays off.
And kudos to you, because I used to run a startup in Milwaukee, and all of our client pre-dinner cocktails were done at Blue on top of the Pfister.
Yes.
I mean, one of the best views in Milwaukee, and that's
Better
a
than
place.
This one. Yeah, it's great.
And that's a place where I feel like a lot of the community goes and has a drink before dinner, after dinner, or something like that. But it's always packed whenever I go in there. It's a great spot if you're ever in Milwaukee.
If you can have a packed bar with an empty house, now obviously you always want the hotel to be full, but every hotel has their days that aren't. And if you can drive that consistent and repeat business, like I said, I think it really does. It sounds cool. It makes the vibe better, but it also, in my world, makes the ROI more sustainable.
Absolutely.
Well, that does it for another episode of The Modern Hotelier. This is where, Tiffany, you can let people know how they can get in touch with you or how they can find out more about Marcus.
Absolutely. It can be as simple as kind of searching for Marcus Hotels. It'll take you to Marcus Corporation and everything else there. But I'm also Tiffany Donato at marcushotels.com is probably the simplest. And if you're in, this won't post yet. So I'll be in Phoenix next week at the lodging conference. So I'll see a lot of people there.
Well, that does it for another episode of The Modern Hotelier, the most engaged podcast in hospitality. So whether you're watching or listening, we appreciate you and we'll see you again soon. Thank you, Tiffany.
Thanks so much, guys.
You made it to the end of The Modern Hotelier. Thanks for watching or listening. The Modern Hotelier is produced by Modern Hotelier Media. Make sure to like and subscribe if you're listening on YouTube, or subscribe wherever you get your podcast. If you know a good guest, sponsor, or have media needs, feel free to reach out to us at hello@themodernhotelier.com. Thanks and have a great day.